Very good evening, ladies and gentlemen. Very warm welcome to all of you. And I welcome to you to this webinar, which is on, broader topic is trading psychology, money management, and developing winning attitudes. Now, the thing is that, and yes, the recording for those who are watching this currently, maybe this will be on YouTube, but the recording of this will be available. We will be communicating with you. And those who are watching this on YouTube at the present, what happens is that you can follow us on various social media channels and feel free to attend any of these live webinars. Those who want to get in touch with my team can just leave their numbers on the message box and my team will contact you if you want to get in any other further association with us. So warm welcome to all of you once again. My name is Mohak Pachisia and I'm the founder of Technically Sorted. Technically Sorted, and I started trading a long time back. So when I moved into the first year of my college, that is the time when I started to explore markets and trading. It has been a very long journey since then, and I've had my fair share of mistakes and losses and drawdowns and upheavals, etc. All those mistakes which all of you have made, I have made at some point in time also. The only difference is that I never gave up on this. Also, I have formal education in technical analysis through the Chartered Market Technician course, and I have some formal education in fundamental analysis also through the Chartered Financial Analyst course. Now, these are textbook stuff and these are higher education stuff. But what I really appreciate about trading is that for trading you really don't need to educate yourself in finance. What you require basically in trading is, yes, you require the knowledge of markets, yes, you require the knowledge of the methods of technical analysis, but moreover what you require is a mindset. And this mindset, which can be installed in any person provided they have the desire and the willingness to go beyond what is given to them. Now, mostly when you hear people talk about trading around you, there are a lot of beliefs around trading which are actually not very healthy beliefs. Okay, so we all in this quarantine time right now, and we've been doing a lot of these work ourselves. Amongst all of you, many of you have the facility to do your work from home, many of you don't. Okay, now what trading gives you is this ultimate freedom of working from anywhere and anytime you want, as long as you have an internet connection and the required capital to fund a trading account. So recently, even I've been doing all the household work myself, etc. And I've really realized one thing is that despite all these economic problems around us, the restrictions around us, the trading business has not been affected. So in a way, I'm lucky to be in this. I want to share this method and the idea around trading and a perspective, so all of you who have some logical idea about trading, some make believe, made up beliefs about trading, you can gain from this perspective too. Okay, I just like a show of hands of how many over here are full-time professional traders. Okay, I see a lot of times professional traders do come to my courses, and they contact my team also. I just want to check how many are full-time professional traders. A few hands are up. You can raise your hand. There's a button out there to raise your hand, right? Also, I would like to check how many of you are completely new to trading and have not really explored it much, etc. You can raise your hands. Those are completely new to trading. Okay, I see a lot of hands up. Great. Okay. Now, okay, first of all, thank you for joining. And yes, the good thing, the reason why I asked even if professional traders are present today in the webinar is because professional traders have the knack to keep learning along this journey. I'll give you a small example before we get into the presentation. I'll give you a small example. Generally, if you go to my social media platforms, if you go to what we share on Instagram and on Telegram, etc., you will find that there are a lot of students screenshot making thousands and lakhs of rupees, etc. And they are actually performing, my students. They've been trained to perform in a certain way. and they express themselves in that way. What I want to share with you is 3 days back, a student of mine who is very young, just out of college, and is trading with a certain capital. And right after learning and doing his entire process of all the homework, etc., which was given to him, he started to make about 600 rupees to 800 rupees almost on a daily basis in the markets. Now, the reason I'm taking this example is because I want to make sure all of you know that the numbers don't matter. What is 600 and 800 rupees for him? Maybe for him and 6,000 and 8,000 rupees tomorrow, or maybe for somebody else is 6,000 and 8,000 rupees tomorrow. See, I have seen this happen a lot. So he messaged me and he says, sir, I'm not being able to cross this amount. There is some sort of mental block. So this happened, and I told him the solution was simply that his entire focus, the moment it reaches that point, his entire focus and entire beliefs concretize and crystallize onto looking at the M2M. Now, believe me, no matter how good you are, no matter how large scale trader you are, there could be a point that you have such tangible, restricting, and self sabotaging beliefs at times. And that is why a trader needs to continuously transform, continuously learn, and continuously go ahead, revive from the mistakes by correcting the mistakes. And I told him the solution to it. He deflected his entire focus towards the market movement, and the next day he messaged me showing me a profit screenshot of rupees 2,500. I said that what I told him worked out. The reason I'm giving this example again is because numbers don't matter. You start with a 10,000 rupees capital. If you do the right thing, I started with almost no capital. I mean, the amount of capital which I had is like the brokerage I pay or normally on daily basis, the brokerage I give, the brokerage and the charges, my capital size was much less than that. That is how I started. Okay. If you do the right thing, having 10,000 rupees in your account and trading can be a wonderful thing. You can grow exponentially. And if you do the wrong thing, you put 10 lakh rupees also, and you will lose money. The markets are environment where there's a labyrinth of literally infinite number of ways it can move. And to be able to scratch out or to scalp out, whatever word you want to use, if you want to scoop out your share and do it consistently, then you can create an income source which you can rely on. Many of my students and myself, the income we make from trading, we rely on that income and for our expenses, and even for not just the basic expenses, even for luxurious expenses. Now, to the novice trader or to the trader who is very new to the market, it is almost impossible to conceive how this can happen. This happens because majorly our minds and our brains are wired in such a way that we tend to be extremely survival based in our approach to trading. And because of this survival based approach to trading, most of the people are trading for the wrong reasons. Either trading for some sort of addiction, or they have to try and be a hero in front of everyone to just gain popularity, that they made income from trading, they made some money in trading. You know, that there is some sort of pastime for some people. They think that they have extra money, and because they have some extra money, it is okay to spend some money, even if it is about taking risk in trading. These long reasons, and often these reasons let you to trade from the survival based mechanism. The survival based approach is a very common approach, and 95% of the people 95% of the people lose money in the markets because of this. 95% of the people, they are absolutely, it's biological. I'm not getting into the biology or the science or the neurobiology of it at the moment, but it is biological. When they react when they get a loss, immediately they want to react in order to get that profit, because the flight or fight mechanism starts acting up. This has happened with me too. So I'll give an example. The first time I actually hit a big number in trading, which I would consider at that time as something very, very big. So I think I was making about 80,000-90,000 rupees on that day. And before I started the day, I had absolutely no idea that I would be making that kind of money. I did the right things and I just got to that profit. Once, and that was the level of profits I had never seen before. I had never ever seen before. So what once happened is that I was taking those trades and I ended up taking more leverage. I ended up taking more aggression. In general, I'm more careful about it. I have rules, etc. But as I said, everybody learns and everybody makes mistakes. So I made the mistake of taking a big size position, and I suddenly lost 20,000 rupees immediately. Now I had about 85-90,000 rupees in profits, and I lost 20,000 rupees. So my mind entirely wanted to focus on what I've just lost and fight it and win it back. In order to fight and win it back, I lost some more money. Now, that was still a stage in trading where I had evolved a lot, so I did not lose all the money. But I have had days when I was, in my beginner stages where I would actually lose all the money I made in the markets, because my entire focus did not go on the 70,000 rupees I still had in my account as net profits. My focus went on the 20,000 that went away. This is fight or flight response, ladies and gentlemen. And the professional traders do not trade from that perspective. Professional traders think differently. Now, what do I mean when I say, professional traders think differently? What do I really mean? When I say professional traders think differently, I simply mean that they have a tendency to look at the markets and, to be very honest, look at their life and their lifestyle and how they approach their work also, which 95% of the people don't have. This is not just the truth in trading. This is the truth in any business and any sort of wealth creation function in the world. Why do 5% of the people have 99% of the money in the world, or whatever that statistic is? Basically, that statistic goes to show that a few percentage people have the quality of life, the lifestyle in terms of the money they make and what they do with that money, the freedom they have, so to speak, and the way they execute their work, the way they grow. There is a huge difference between this small 5% of people and the rest of the people. It is the exact same thing I have seen when I have grown up observing a lot of traders throughout my career, worked at different places, worked with some very seasoned traders, just by observation, interactions, and learning. What I realized is professional traders have a completely different way of thinking. In my initial stages, what used to happen was I was more acquainted with the brokers and the clients of those brokers, etc., who would actually not have a very good mindset towards trading. And the only thing which I learned from them was what not to do, right? Only thing which I learned from them was what not to do. But when I met these professional traders and I traded with them, I was sitting in the same office, spending the day, saw what they saw, or sometimes did according to what I thought, but it was similar to what they did, and discussing thought processes, etc., how to manage money, how to manage risk, how to make sure that you're consistent by the end of the day, end of the week, end of the month, etc. All these different thought processes were so new to me for the first time when I interacted with professional traders that my life completely changed. And I was the one who used to seek knowledge. So no professional trader will go and easily tell you, because everybody doesn't have the same quotient of expressing themselves. Like myself, not all professional traders are actually teachers, right? So you have to just learn a lot from observation alone. Ask the right questions. I realized the thought process was completely different for these people. I came to this ultimate conclusion that yes, this is true, that they think very differently. And the ratio, some people ask me this question. So these days you have markets, you've got scanners, you have algos, you have shortcuts. Do you have any shortcuts? Can you give me some shortcut, can you give me some scanner, etc. I tell you this honestly, no matter how much you go into technology, okay, 20 years back you didn't have the computer. You did not have the frequency at which you have the computer now in every household. You did not have the electronic medium of trading. You did not have discount brokers. In fact, if you called a broker, it was also expensive. You did not have mobile phones, etc. You did not have a lot of technology 20 years back, and the ratio of people making money to losing money was the same. Now you've got smartphones. At the tip of fingers, you can take a trade. You can take a trade from, you can travel and you can be trading, and you cannot talk to any broker and be trading. You have people like myself on different social media channels who keep sharing ideas about trading, and sometimes have some interesting conversations or publicly discuss something. There's so many ways to enhance your trading electronically these days. How many people have actually jumped from that 5%, from that 95% to the 5%? The ratio is still the same. The ratio is still the same. Today we are going to discuss about developing winning attitudes. At the core of developing these winning attitudes, I must tell all of you that I teach a course in technical analysis and trading. I don't really just call it technical analysis course, I call it a trading course, because I believe trading is execution. Analysis is a part of the entire execution. It is not the all of it. Analysis is a part of that execution. It is not all of it. Also, I teach trading psychology within the realm of my, some talks are there around trading psychology around it, which enhance the mindset of students. Right now, I'm writing a book on trading psychology, and there are people who are into full-time trading, a few people in the year who approach me for personally getting mentored. And that is completely, or I can say at least 90% of the work is done on their attitudes, beliefs, and behaviors. I have seen some drastic stories happen in front of me. And at a functional level, I truly believe, ask and it is given. I truly believe that if you can conceive something, you can completely believe it at a level where you want to express it. When you believe it, you will express it, and there can be no other way. Once you express yourself in a way where your beliefs are aligned in a functional manner, you are bound to achieve those things eventually, which you set out for. This is a quote from Napoleon Hill, Think and Grow Rich, the author of the book Think and Grow Rich. I cannot tell you how important that book has been to me, and the nuggets which are given over there, the gems which are given over there. One of the places which I remember is about decision making. Few chapters from the book have really touched my life, and those who are watching this webinar, some of you will go on YouTube and watch it again. Some of you will see my other trading psychology videos, learn from it, grow from it. Some of you who don't care at this hour or this time in your life probably will leave the webinar right now. Some things I'm about to tell you now have a lot to do if your mind and the time of your life is right now to associate with these learnings, to associate with a new train of thought. So it's like sometimes you buy a book and you don't read it until a long time, and then once suddenly you read it and you like it so much, maybe after years you read it. What I'm about to say, some of these things are like that. At a very base level, the first thing which you need to understand right now is to accept and acknowledge the fact that it is okay to change your beliefs. It is okay to change your beliefs. It is all right. It is completely fine. Most of us are so stuck up in our beliefs towards anything because we attach that to our identity and our ego acts up. You cannot be egoistic at the same time learn something. You cannot change your ways if you are egoistic, if you think what you're doing is right. If everything what you're doing is right at 100% level was working for you in your trading, you would not be sitting over here right. Getting the point? We're going to take up points and discuss how at different levels, the professional traders and the novice traders, what are these differences between them and their thought processes? We're going to take up some examples, and towards the later part of the course, I will take up some, later part of the session today, I'm going to take up some chart examples and do some, give you some examples of thinking process while executing a trade. The difference also will be, I'll give you some stories, etc., from these experiences of mine, which highlight each of these points which I'm about to discuss right. So till now, whatever I said, I hope all of you are ready for this. I will keep your minds, eyes, and ears open. If you are ready, raise your hands. The whole game of getting to achieve something through a shift in belief, the shift can be so sudden, it will happen in a millisecond. It will happen in a millisecond. Some things which you will hear right now will aid you to do that. Okay. The first thing, novice traders do not have a trading mindset. They trade emotionally. The market behavior, the price behavior tells us this, that there are different groups of people acting with different, different emotions in terms of bullish or bearish at different points in time. So for those people who become very, very vehement about investing when the market is at a lifetime high, when they think that their mutual fund investments or their other stock investments are giving them amazing returns, it is the right time for them, or they will go and tell to the world that they should invest more or they should have bought more, etc. When every person who is your friend and your neighbor and your uncle, auntie, everyone who doesn't know shit about the markets, they will come and tell you it is time to invest. At those times, in very bigger time frames, the market tends to make a high, make a top. When everything is pessimistic, on the other hand, market often makes a bottom. The same behavior is replicated in the smaller time frames, and traders who understand technical analysis understand this fractal nature of the market. The intraday traders are influencing the 5 minutes and the 15 minutes and the hourly charts. It is always mass psychology. And one thing which technical analysis tells you, and trading execution is importantly about, is that the market always moves in extremes. Excuse me. The market always moves in extremes. So very often, the novice trader you will see them, sir, I went long on a stock, for example. I went long on a stock, sir. I was getting profit. I booked profit, but it went higher. Now what happens is that these people become so personalized. They take it so personally. They personalize the entire action and what happened with the market so much that the next time they're going and sitting and trading, they don't want to book profits. They become emotional. Had these been the same people who had not entered the trade at that time, they would have entered later. These are the same people or similar category of people who are creating that buying pressure by hitting the sellers and pushing the prices up. Now these people tend to chase the prices sometimes. Buy, sell, buy, sell, buy, sell. There's nothing wrong with following the trend. You need to understand money management well. And then they will go to this extreme end and go full all in. They will buy more shares or more lots than their position sizing discipline should allow them, etc. And then finally that will become the high of the day. Also, the opposite end of the stick, I will hear these complaints सर मैंने बुक कर लिया प्रॉफिट, sorry, I did not book the profits and it did not go in my favor, it went against me. Because they are looking at a different phase of the chart, a phase of the market, where that up move is actually not a up move with a broader trend, it's a pullback in a downtrend. And that pullback in a downtrend is just making them very hopeful that probably they have caught a bottom. They become very emotional with those experiences, and again they do the opposite of it. In some time or the other, the market does not really give them the money, and then they become more emotional, etc. The entire action towards the markets are out of emotional behavior, not out of objective methodical behavior. So I remember one of these days, a few days back, and since during market hours, I just keep myself isolated and don't talk much, etc. But I happen to be chatting up with one of my students group where all the past students are there. Okay, and this is around the this day. Okay, I'll just show you this day. This is the Nifty chart. This is 60-minute chart, and there's some extra data over here. Just give me one moment. So this particular day had been absolutely near these levels. Okay, I had some levels marked out, etc. I bought a lot of puts on Nifty, lot of puts, and it was a measured risk. So I got out of my chair and I was starting, just moving around. I was not looking at the market. I just wanted to give market a space to breathe. I knew market has come to my favor. The trend began. I scaled out of my profits. I did not expect such a big move so fast. I scaled out of my profits little by little. So say for example, let me just draw it by a pen over here. And now the whole screen is in front of you. So I took the entry somewhere around these areas. Okay. Let's assume that I added some positions, etc. Let me assume this to be an average. This was my short position. I booked out about 30% of my profits over here, 40%, and a total 50% profits over here, and kept a trailing stop loss over here. As this fall was happening, I had about 20% of my position left in this part of the move, and I booked near the bottom. So on an average, so to speak, my average exit would have been an entry over here and exit over here, which is quite substantial. Okay, this is how professional traders actually do. We are not looking for tops and bottoms. We are not looking for tops and bottoms. Also, because I was having put options, my delta or my exposure to that position increased because the delta of my put increased. So this may be the size of the move I got on Nifty chart, but in actual terms, the net profit was much bigger than this move also. If I have to convert the returns on options on the basis of points of movement relative to Nifty movement, it was a big trade and it was sudden, etc. My entire objective was to follow my method of entering the trade, and as the market reacted, scale out profits, follow the strength of the movement and the various aspects of price, market breadth, and price trends and levels, etc. All these variables, RSI, everything that I was looking at. So I'm just discussing with you that over here, the next day, so there was this there was this guy who is my neighbor. So he just saw me and he was like, how is trading going on, and he's younger to me, etc. And so he was always like a learning perspective, nice to talk about, from a learning perspective, very healthy conversation. So I told him, that I had a good trade. At the high of the day, I had actually bought a lot of puts in the second half of the day. So he said, this is the time actually he went on buying calls worth rupees 9,000, which was all of his account at that time. So he used all his money to buy calls. Now understanding this bigger picture scenario, I'm converting this onto the hourly chart. What must be this guy thinking in order to actually be doing this, taking this action? This guy was thinking that because the market has gone so much down, I think it will go up. And even when market is actually struggling to go up, his emotions are so attached to the up moves that he's giving more importance to the up moves and less importance to the down moves. Is every time market is actually struggling to go up, he thinks the market is about to just burst up or something. There's nothing wrong if he had a stop loss. He didn't have a single stop loss. He was frozen when the market went against him. Each and everything which he did was absolutely emotional. And much of it was not doing anything except for sitting frozen and letting the loss run. I don't want to compare in the sense one person to another, but this is how most of the people trade. It's not just me, but many professional traders would have done what I did. Or maybe their entry would have been 40 points ahead of me or later of me, doesn't matter, but participated in the big part of the move and successfully, objectively, with objective mindset, gain money from the markets. So you see one situation where the professional trader and the non-professional trader with two different mindsets. Now this is about one single trade. The first thing I tell in the first session of my course to students is that a professional trader does not think in terms of single trade. A professional trader does not think in terms of a singular trade. The novice traders, the newbies, they tend to attach their emotion. If they make money on a trade, they feel very happy. If they lose money on a trade, they feel extremely sad. All the emotions are tied on to one trade. Trust me. All the emotions are tied down to one trade. And a professional trader does not think like that. Professional trader thinks objectively and thinks over a series of trade. I'll give you an example. Although I know publicly people like to hear that I must be making money on every single trade. I had a small amount of short positions through put options yesterday as an overnight position. And I lost money in the morning on that trade. I squared off those short positions. The money which I made intraday was 10 times the money which I lost in the morning. I'm not joking, it's 10 times the money. Or rather multiple times the money, if not 10 times the money, but multiple times the money. This is common, this is normal. There is nothing new about it. It's just that I choose to be objective. And when I'm not in the mindset, or if I don't feel like, or those phases of my trading career where I was not comfortable to take frequent overnight positions, I would not do so. Because being objective as a trader is also understanding your own limitations and go accordingly. There are some people who are not trading actively in the volatile markets. If they understand their limitations, no problem. They're not doing anything wrong. If they want to, if the instinct tells them that, okay, fine, let me take some light positions, they can do so. There was a time in my life I would not have traded the volatile markets. I have been trading, pretty much every big move and participating in each big move in the recent past. In fact, the whole of March, yes. I would not have touched the market at a certain time in my career because I did not find myself comfortable. It is okay. And then I started to even participate, become more objective. Even the volatile markets, I started to participate. Now, why am I able to do this? Because I don't think about just one trade. So I have something called a plan for consistency. I have a plan for consistency. Let's break it down to smaller portions. If I'm not emotionally attached to the outcome of one trade, that means I have some objective plan of consistency. What is my objective plan of consistency? I can go into various details. I'll keep it simple for this crowd I'm interacting for the first time with. So if I take up a trade, I take a position size which is just so much that if I lose money in the trade, it does not impact me. It does not impact me emotionally. And I'm effortlessly taking the next trade, which can be a very good winner. When I book the profits, my risk to rewards. Now, sir, how do I know what is the risk to reward? No, the biggest lie I'll tell you about technical trading, most places you see or read on various articles on YouTube videos, and even some trainers and teachers, they talk like this. I will tell you to take a risk to reward of 1:5, 1:4. I say all that is nonsense. I'm telling you that. Risk to reward, I can tell you that in my last 10 trades, some of the trades have been risk to reward of more than 1:5 or 1:7. But the point is that risk to rewards is not in your hands. The market gives you the rewards. You can prejudge a trade setup by seeing the strength, which may give you a subjective level of risk to rewards. It can give you like, if you're losing 100 rupees, you can be gaining 300 rupees, 400. You can plan something around it. It is subjective. But when the market starts moving in your direction, you need to be objectively booking profits. You need to be objectively booking profits. The problem is that when it comes to money management, the first thing, which all the retail traders want is they want to pick bottoms and tops, and they want all of them want the big move. They don't want to book profits. The professional traders have a regime to book profits. You have to build a premise. You have to build a regime. Otherwise, you will get emotional. How many of you have had your trades running into profit and not book profits? Raise your hands. Substantial profits you were getting, you did not book it. You were expecting and wanting more and more and more, did not book profits, and you lost the money which you were standing to make. Raise your hands if you have this experience. Thank you for being honest. Thank you for those who have raised their hands. That means you've realized something. That means you have gained something from today. You can correct your mistake. You have to develop a plan. So I remember one day, and this is again towards the earliest phases of my trading. For me, making even 6,000 rupees was a big deal. And I was getting a profit on a trade in the morning, which I had planned from my homework. I was making 6,000 rupees. And one of my friends called up for some work. And that time I was distracted. So by that phone call, and right now, like I have never seen the, I never see the phone in between market hours so easily. Gently keep away. But at that time, I was not so disciplined, you can say. So my friend phone call came, etc. And I kept the phone. I don't know what dream world I was in. I was making 6,000 rupees. My target achieved. My target was achieved. My risk was about 2-3,000 rupees max at that on that trade, if I remember. But I was making 6,000 rupees. I should have booked profits. I would have been done with that trade. I did not. The trade went for a loser. I was frozen. I lost 2-3,000 rupees on that trade. Net, the difference which was made by the end of the day was a difference of 10,000 rupees. Because I would have, or 10,000 or 9,000 rupees, I would have made 6,000, but I actually ended up losing 3,000. That is how the major difference comes up. Mathematics. Then what I did, when I have a lot of journals, I keep writing. So I wrote what I have learned from this day and from this mistake. And when I saw the difference, there was a problem. My capital at that time was around 30,000 rupees. And that too I had made from a smaller amount, accumulating profit. That end of the day would have risen to about 38,000 rupees. But I ended up having 29,000 rupees in my account. So the percentage difference, the absolute difference, there was an issue. There was a difference. And when I wrote that down, it pained me to even think what mistake I have made just because I did not have a plan. Now, why I did not have a plan, I will tell you the internal reason for it. 2 days back, I had taken a trade and I booked out profit very quickly. Why? Because I had taken a very big position and the substantial movement, sort of even a small movement gave me substantial profits. And I clicked out of that trade completely. I did not see that my targets are being achieved. My entire focus was on my M2M. I did make money, but I was having some regret feelings. This is again a difference between the professional trader and the novice trader. A professional trader can slash out the regret and look at what is the next move, what is the next best trade. This emotional trading which clouds the minds of novice traders, they are either full of regrets or they're full of hopes. And a weird mix of this leads to the big difference which I'm talking about. From a net profit to a net loss, that's the difference. Now, what is the first money management principle which I needed to place? Position sizing principle. And second, to understand how to book profits. Either scale out or book when my target has come. As simple as that. And life has got some very simple principles on which it can be beautiful. But it is the simple things which tend to become very difficult for people to follow. Isn't it so? Isn't it so? Okay. So I have some questions or some comments by some people. If someone is having only one lot, then how to book? Okay, Mr. Guru Prasad ji, are you there? Yeah, you are there. So he's asking an interesting question. He says, if I have only one lot, how do I book? Now let me tell you, this is the exact same question my student had asked me, one of the students had asked me in the inner circle group. Inner circle group is a group of all my past students, and we have continuous touch with them. So I was talking about something, or somebody had given an example of booking out profits stage by stage. He said, I'm trading one lot. How do I take out profits? So I told him, if you're trading one lot, either you can choose to step down or step up. If you're trading intraday, for example, this is possible to do. Suppose one lot has 500 shares. Don't buy it in one lot. Buy 500 or 400 shares in cash. You will get the divisibility. Or if you accumulate some money trading one lot and making consistent. So Mr. Guru Prasad ji, what you can do is, suppose you have a trade, you have entered the trade, and your profit target will end, if the price reaches your target, it will end up making you 15,000 rupees. Okay. The first impulse of the price movement comes, there is some extra trend, you're following the trend. Maybe the 15,000 mark has not been reached, maybe 12,000 has been reached. You book out the profits. Maybe later that could have been 15, 16,000. It's okay. But you have sacrificed some dollar gains in order to get some consistency. Now, once you have got some consistent profits, and if you want to, you can increase your position sizing from one lot to 1.5 lots. That means if one lot is 500 shares, you buy one lot and then you buy 250 shares in cash. Once 50% of your profit target is achieved, you exit 250 shares and you hold on to that lot. Some stocks that is more volatile. What Mr. Jigar is asking, give some stocks that is more volatile. How do I give? You want me to send you some stocks? Oh, I don't understand your question. This is a webinar with certain people here to learn something. Maybe I don't know what you mean to ask by this question. Give some stocks that is more volatile. And if I give you some names, is it sure that it will move according to your plan tomorrow? Please ask good questions. See, there must be some perception that is having such a question coming up. Okay, you can watch the market to see what stock you want to trade. Okay, Guru Prasad ji is saying that sounds good. Thanks for your inputs. Oh, thank you. Jigar is saying no, sir, but one idea will get. Jigar, why are you narrowing your entire attention to getting one idea? And I'm telling you myself, it is not about one idea. This is what you're asking question is the complete opposite to the purpose of this webinar. In fact, you should learn and change your beliefs. If some learning does not change your belief, how good that can be? Jigar is saying like India Bulls, like this. Okay, fine. what do I do with this? There can be a lot of different stocks having a lot of amazing movements. You go and check the market for yourself. Well, I'm going to skip this question anyway. This is not the question. So I don't attract these kind of questions generally. But anyway, if you have something nice to ask, feel more than welcome. So let's come back to the psychological principles. Healthy money beliefs, healthy sense of self-evaluation. Okay, healthy sense of self-evaluation. Jigar, I hope this webinar gives you a lot. Please stay around. And if you want to ask more questions, ask. But this question I can't answer. Mr. Jay Kumar is asking, Sirji, do professional traders have a day targets of profits? Okay, very good question. I will come to this answer. There's a trick behind it. You have to understand that. Let's understand this point because the answer is hidden over here. See, professional traders have a healthy sense of self-evaluation. Novice traders have money beliefs that are not sticking them, not teaching them how to make money in trading. Most of the novice traders are thinking by the way the society has asked them to think about money. The society is and will always be comprised of the 95% mentality people most of the time. The society will always be comprised of most of these people. And therefore, in order to gain more approval from the society, we tend to do the things which the society asks us to do. Our social structure asks us to do or teaches us. This is ingrained in our biology because we want to be with the tribe. Because we hunt and eat with the tribe, so we want to be with the tribe. But this mentality, you have to evolve beyond that in order to have a higher, healthy sense of self-evaluation. Most of the people have thought of money in terms of aaj ka income, aaj daily income, weekly income, monthly income. Trust me, it does not work that way in markets. What if the market is full day, it is sideways? How will you make a daily profit out of that? Think about it. What if you want to make a daily profit where you are making say 5,000 rupees and you are happily making 5,000 rupees on Monday, Tuesday, Wednesday, Thursday there is a move in the market where you have already entered the move, you have done everything. Within a second, market has given you 5,000 rupee profit, and because your target was so, you have booked it. The same trade could have made you 50,000 rupees. You have put yourself back 10 days, that is 2 trading weeks, 2 weeks. You put yourself back 10 days only by one mentality that I want to have a daily target. Whereas the market opportunity comes in different shapes and sizes on different days. Jigar is asking, is market every day good for intraday? So Jigar, there's no definition of good or bad, but yes, it is not the same shape and size every day. Let me give you all an example like this. So say for example, I'm going to draw over here how to look at this. So say for example, the number of opportunities or big movements in the market. This is the number of stocks and number of big movements, etc. Or suppose you're looking at Nifty. These are the total number of big movements that are happening within the day. And this could be somebody could be making money on a 20-point move, somebody on a 100-point move, somebody on a 40-point move, etc. Somebody on a 300-point. Doesn't matter. Now you have some objective level of perception or objective thinking about the market, and a limited number of moves will fall under that area. So under your area of understanding, maybe these moves fall. So there are possibilities like this, but you can perceive objectively these ones. It is okay. Within this, if you have the right mindset and you're not exhausted and you're trading with the right mindset, even if you say take some and preserve this, if you can do that and repeat the process, you can make a lot of money. Now this whole thing can be intraday. But what happens is this entire set of these little dots in intraday, they keep changing. So if I have to make a different sort of superset for this will be different for different days. But instead of thinking about on day basis, if I think about a broader basis, that within a matter of 2 weeks, within a matter of 1 month, within a matter of say a number of days, that time I can see that the market will provide me enough number of opportunities that will fall within my perception of objective thinking, of predictability and probability, right? Are you all with me on this? Those who are with me, raise your hands, right? I really like talking about real stuff. I don't like to sort of push people into thinking that you can do some magical thing every morning. Why get unreal? I've seen how professional traders think. First of all, they don't buy into shitty things. Most of the things around you, which is written or spoken about trading, 90% of it is of no use because they are published or they are said so that you buy those books or do those courses. They're not really done for your good. They're done to attract you. So I'm telling you this, there will be a limited number of moves, no matter how good you are. At different stages, you will have to evolve. In the beginning, you're not going to be a Michael Jordan on the basketball court. First, you have to see when Michael Jordan is practicing, you can see that out of 500 times he wants to put the ball, out of 500, full 500 times, he can put the ball up in the basket. Okay. Somebody who is a bowler, who is doing net practice for batting, suppose Harbhajan Singh does net practice for batting. In the net practice, he can hit sixes. But when the market, I'm sorry, when the match is in the last over, you have got 20 runs to win, 20 runs to win in say 6 balls, and there are only 1 or 2 wickets in hand. When that pressure is there, so will that same net practice while a sixes come up all of a sudden? Think about it. This is the difference between reality and the textbook. And you have to bend your psychology, evolve your psychology. It will happen through stages, right? Exactly. It is not made in some time. It takes time, right? So you have to be able to sacrifice that time. There's no number. It can take 4 or 5 years. It can take 1 year. It can take 6 months. I have seen, I'll tell you turnaround stories that happen within 6 months. I'm not talking about small numbers. I'm talking about huge numbers, life-changing numbers. I've seen 6 months transformation happen. It's how you choose. If you choose, you can act your entire life. You can be a gambler in the market if you choose to be. I didn't choose that. It's as simple as that. What we objectively desire, what we can conceive and believe, we can achieve, right? So you have to understand this part. Now, when it comes to the healthy money beliefs, or like in terms of capitalism, what is any business? You see, Pani Puri wala is also an entrepreneur. Ratan Tata is also an entrepreneur. There is no difference because the entrepreneurial spirit is the same. And you can take any large scale industry and say, fine, this has been passing on through generations, but effectively every business started from zero. Effectively, every business started very small. Even the biggest industries you see today, they started substantially small. Biggest companies you see today. So there must be something which is an exponential growth factor. That is what successful traders are looking for. Many people think successful traders are looking for percentage gains, percentage on capital. And at the same time, many people think that successful traders are looking for, that they're looking for absolute gains, daily 5,000, daily 10,000. Why think so small? Because if you think like this, you will confine yourself like this. And what will create is, it will create a rigid belief. All of you have heard of this example. When an elephant is a baby elephant, it is tied to a log and chained up with that log. when the baby elephant is a baby, it does not have the power to break the chain. But when the elephant grows up and becomes a big, fat, powerful elephant, it still does not have the courage to break the chain, because the mental conditioning has been restricted that yes, you cannot go beyond the chain, you cannot break the chain. And it is real, it is tangible, it is something that is strongly present in the mind. Now, if you think that you want to go and make 5,000 rupees in the market, be my guest. I'll be happy if you can do that. Do that. But when the opportunity is in front of you to make 20,000 rupees and you're not using the right method, then you will not grow. I'm telling you what successful traders are looking for. They're not looking for absolute daily gains. They are not looking for percentage gains. They're looking for exponential gains. In the same capital, end of the day, if I made 7,000 rupees, it was a big deal. In that journey itself, I have seen much multiple times of that numbers and will continue to see that kind of growth. The point is you are using leverage, so there is no point thinking about percentage capital. आप एक के बदले 5 का माल खरीद रहे हो, एक के बदले 1 का माल नहीं खरीद, so percentage return नहीं apply होता. If you're using consistency, for your consistency, if you're taking some methods or twisting something, that's fine. Then I can get into details with that. But if you perceive कि daily itna banana hai, stick to this, that's not happen. Say for example, a few weeks back, I had some losing trades, I had some winning trades, etc. Okay, I'm not going to disclose the original numbers, but let's just say for example, 50,000 rupees. I made 20,000 rupees on Monday. I made 20,000 rupees on Tuesday. I lost 20,000 rupees on Thursday or Wednesday. I got 0. On Friday, I made another 30,000. Net I got 50,000. Is it really bad? I mean, nothing wrong with it, right? As I said, I'm not going to disclose the actual number, but this is how it happens. There will be this dynamism. The more you are able to be objective with it, what is 50,000 in my example can be 5,000 for someone at a certain point in time. But if you learn to take that 5,000 objectively, you will take that 50,000 objectively. And on a good week, every day you can make 50,000 like that. Depends on how the market moves, how objective and disciplined you are, and probabilities. It's okay. The best of people can be wrong sometimes. Okay, Arindam is asking, does a professional trader offer intraday or any positional trader with proper money management to create secure profit? Honestly, it's dynamic. Arindam, it's completely dynamic. So, with your similar surname as yours, I have a student with the same surname as yours. So I just recall his example. 3 months back, he called me up, and he's really grown his account. Within a year's time, he's really making a lot of money. And he was telling me, I'm taking only positional trades. Okay, and he really got like 30-40 rupees on a 4,000 lot, and held on to 1 or 2 lots, held on for days, did that in 5-6 stocks, made a bunch of few lakhs here, few lakhs there, made a good amount of money. He was very happy. Just last week or something he called. He said, no, only intraday trades, only intraday. The market situation is more volatile. You can get a substantial move in intraday. So it's very dynamic, Arindam, so to speak. You really can't put a finger on that. See, I have some people who call me up and say, so I want to take a trade which I can hold on for 6 weeks or 4 weeks. Okay. I tell you, those are the kind of calls I generally get when the market has trended recently. And then market goes to some sort of a sideways phase. So I tell them, you are just so influenced by the recent market movement. That is why you are thinking like this. Absolutely nothing wrong with just being an intraday trader. If you have the right method and if you have the right psychology, you can choose. So how I put it to conclude, Arindam, how I put it is, I like to say you go as per what you are inspired by. Some people are not comfortable with overnight rest. It's okay. But once you have accumulated profit and you have gained objectivity, when you become, see, when you're making, when you're doing something for survival, your thinking is attached to fear. Suppose I tell you, Arindam, I'm just taking a nominal number. Okay, it can be a different number for you, but example there. Suppose you are taking 2 lakh rupees and trading. Okay, and you have made returns 10, 20, 30,000, accumulated. You made that 2 lakhs, 4 lakhs. You put the 2 lakhs in bank. Again, you accumulated. You made another 2 lakhs. Put that in the bank. You have actually more money in your capital. You got more money from the markets than you started off. You just don't even have any worries. And then you see a chart pattern, which says that I need to hold on to the stock for 4 days. Your mental state will be different, isn't it? So you will be inspired to take that action and hold on for those 4 days. So I personally say that you have to acknowledge you are evolving at a stage, and you need to go step by step. Do what suits you in the beginning. This is what a lot of my teaching is around, that everybody is in a different phase and you will evolve. Okay, I hope I've answered you. Now coming back to the money beliefs. So the basic money belief I said, and that answered another question about the daily profits. You have to think dynamically when it comes to trading. Now, what happens is at the end of the day, we are human beings who see the sun and the moon. For us, there is night and day. There is a day, there's a 24 hours, there's a week. Time is divided by our self-invented methods and the nature's method also. Okay. Now what happens is that if at all on a particular day I have made enough money in the markets and I feel that there is a mental resistance coming in, or if I feel that I'm exhausted, I'm not having a decision making power right now, because any human being has a certain mental endurance to decision making. Suppose I don't have that decision making endurance right now, I do not want to go and hurry myself, and therefore I will stop. I will have stopped because I want to be consistent. Tomorrow, day after, whenever the next set of good trades come, I will participate. So my beliefs around how I perceive the flow of money. First of all, I have to trust the flow of money. Listen to this very carefully. Learn to trust the flow of money. Learn to trust the flow of money. Most people are in anxiety and fears. So when money is taken away from them from the markets, they can't take it. Even if there's a 5% drawdown on their capital, they have emotional reaction. Their body biology reactions. They have biological. If you don't think from that perspective, if you change your beliefs and you say, okay, 5% drawdown on capital, no problem. I trust that market will give me opportunities. Suppose you have a capital of 1 lakh, 5,000 rupees loss you have. You sit with a 95,000 capital. Within the next 2-3 days, you find 2-3 trades which are giving you 10,000 rupees. There you go. You have got net profit of 25,000 rupees. No problem. But how many people are comfortable being uncomfortable for a while? Think about it. Being uncomfortable. Being comfortable, being uncomfortable for some time can go a long way in trading. It's just a function of beliefs. Because in the societal structure we are born and brought up, losing money means something bad. Making mistakes means something bad. And one becomes very self-criticism, very self-critical. They awaken all that criticism. They never see objectively what their mistakes are, what they learned. If mistake has taught you something, believe me, that mistake, if this taught you something, you can use that lesson to make more money. Therefore, you've really not lost anything. You have gained something. How many of us think in a healthy way? When you have come to the markets, when you have opened any business also, if you opened a shop or you've opened a trading account, you have done in order to take risk and then achieve the reward. So if you got a 5% drawdown, it's completely okay. This was a chance that could happen. In fact, it's not a big deal, to be honest. It's not a big deal. In a string of trades, first 2-3 trades have to be profit. It's not necessary. Okay. Next point. Trade fearfully or recklessly. Novice traders tend to either be absolutely lazy, lethargic, reckless. Ravi Singh is saying no audio. Ravi ji, my audio is 100%. Others are able to listen. I think some audio issue from your side. I hope it will correct itself. My audio is fine. My internet is fine. Just checked. So novice traders have the tendency to be either very fearful or very reckless. So when it comes to reckless is the gambling behavior. When it comes to fearful is the anxious behavior. You can't trade successfully or consistently with this mindset. And the only skill which if discipline and fearlessness. Discipline and fearlessness. This is what professional traders express. When it comes to the use of a method, novice traders don't use a method. They really don't. They are addicted to seeing markets as a random thing. Okay, I do admit that because prices have a tendency to trend, even if you don't know anything, few days you follow the market, you might get an idea. But that is not enough to plot a proper entry, to do things properly. Okay, Mr. Rakesh, do one thing. If you are interested to know the details of my course, just leave your number in the message box where your message is now. I don't want to digress from the discussion, and the rest you can also check from www.technicallysorted.com. But you leave a message, my team will get in touch with you and they will tell you whatever details you require, then you can see. Okay? We have a batch starting by the end of this month and registrations have opened and started already. So you can just book your seat by paying a small amount. Okay, and for everyone whoever wants to get in touch with my team, just leave your number. We'll be calling you. Right now, I'll not be discussing about that topic. My course details are available in many places. If you have any questions towards the end of the webinar, you can ask me. Okay. Now, next point. As I said, the reckless behavior or the gambling nature. Okay. What happens is that when one is frustrated, one might think, oh, what is the use of doing all this? I worked hard, I took some good trade, but I lost money on the bad trades, and that I'm not in profits. What is the use of such hard work, so many hours spent here? And they might end up doing stupid things in order to express their frustration on the screen. And expressing frustration or revenge is not a good place. The market is not a good place to express those kind of feelings. They act either recklessly or they will act fearfully because they've been sort of stung with some bad experience in the recent past, what they perceive as bad or negative. So they have hesitation. Most people think fear and greed are the only emotions. No, there can be emotions like paralysis. You can be frozen, the market will be in front of you, but you will not be able to take the trade because your fear has made you associate with the wrong kind of beliefs, and you're not being able to act because your beliefs wants to express themselves, and that belief is that I'm no good, that I cannot make money, that I lost money so I'm no good, or markets are not going to make me money, things like that. So you will see the opportunity in front of you, but because of the fear you might not act, or you might not hold the trade the way you know you should be holding it. A 90-degree move with the larger trend, beautiful trend, market breadth is high, all stocks are participating, everything is in your favor, but your fear is fear of letting the profits go away, not making you act objectively. On the other hand, when it comes to the professional traders, when it comes to discipline and fearlessness, they have a premise for it. You have to know how to make a premise for it. If you can't, there's a problem. It's a huge difference. I'm telling you, this difference has a huge difference in the implications of how you live your life. I really genuinely want to share this sometimes with people, that they should open their eyes. You can have a life as a trader where you can make consistent money. You can be living quite well. You can have the things which you need. You can have the hobbies. You can express yourself in various ways you wouldn't have because of a 9 to 5 job. Trust me, there is. There are like 4 or 5 new things I have done in the last few months, which I like to explore, including some sport, including some interesting thing, reading something interesting, or different genre of things. Because that is possible. If you're fearless about it, you will find a way. That's the first step. That is why you're here. That is why some of you have already, I can see the names, that's why I can recall. Some of you have registered for my coming batch also are here. Because at some level, you believe, or you want to believe, choose to believe. You're starting, and that's a good thing. You need, why it is thought. Okay, I have one question over here. Mr. Jay Darunkar is asking, elaborate on the fearlessness of professional. This is the answer. Listen to this carefully. For me as a professional, what seems fearless to you, for me it is effortless. Getting the point? So I remember one of the days, so I have a home office, and generally during market hours I'm alone only. But somebody came from the technically sorted team one day, and I was taking a trade. I was having my trading screen open and everything, and there was a net loss. And it was just a small amount, not a big amount. And it was on there, and I was just looking at the markets, was doing things, and while the member of my team, he was busy doing his things, and he happened to just look at my screen to see what I was doing. And probably that's the only time somebody has seen me in my screen while I'm trading. But yeah, so there was this move in the market. I told him, you just see, this is such a beautiful pattern. I just punched the keyboard, tuck tuck tuck, and I just took the positions. I said, you see, this will be our stop loss. I kept a line over there. I said, this is the stop loss. If this crosses this, I'm going to square off. The trade went quite close to my stop loss. Did not touch my stop loss at all. I was sitting very calmly, and it started giving profits. I booked some and I put the trailing stop loss on course. Ended up being a big move. I was in net profits. Now my team member told me, sir, this is wow, it's so effortlessly. How can you do this? You must be requiring so much courage. So I said, no courage. This is a method. If there was a matter of fear, it was because normally if somebody has a loss on the screen, it is evidence for their perception that, oh my God, I should be scared. If this can be a loss, something else can be a loss. No. Do you have to detach that? So professionals are people who have detached that. That is how you become a professional. The function of being a professional trader has got nothing, in my eyes, anybody can be a professional trader. It doesn't have to do with the size of their profits. Is their emotional state, their state of mind. If your state of mind is good, consistent, you can do the things consistently. For me, you're a professional trader, no matter how small that capital is. If you have 10,000 rupees capital, you can start trading in cash and some options. Somebody had asked this question. You can do that. Start trading in cash. There's no harm in it. Learn to make 500 rupees on a trade on a small position. You will eventually increase your position. Know your downside. You can have such downside that you can afford to lose on 4 or 5 continuous trades. That small position you start with. First of all, learn. Have a method. If you don't have a method, it's a huge problem, because no matter what you do, there's a high chance you will end up getting into randomness, and that randomness will play with your mind. Remember that rectangular shape I drew right now, that universal set of the moves that are possible today and what falls under objectivity. If you don't have that circle of objectivity, how do you choose what to trade or not? Isn't it so? How do you choose how to trade or not? Isn't it simple? Logical. Thank you, Mr. J. Really nice. Thank you. But I really suggest it's better to learn. You know. Yeah, Rakesh ji, you can just contact my team. I'll tell you the fees is okay. Yeah, we've kept the fees also reasonable, and really, I mean, the kind of performance people I've had, like people who come to the course. Before they join, they are like, sir, I'm very nervous. I need to do this. I need to learn how to trade. And if I don't, then it'll be a problem because I'm doing this as a career now. Within 6 months or 3 months also sometimes. Or I'll give a recent example. Somebody spoke to me in this language, I think last year somewhere during the Navratri time, August, September, October, or September, October time. And in recent past, in the market falls and a lot of things, consistent big bundles of money that person made. I said, my lifestyle has changed completely. Lifestyle has changed completely. So that's peanuts for him. The course fees is peanuts for him now. But the whole point what I'm coming to here is that fearlessness comes when you have a healthy sense of self-awareness. All these 4 points go together. If you have objective state of mind, you will be fearless. If you are fearless, you will be objective. If you have a healthy sense of self-evaluation, you will focus on the market, not on your M2M. If M2M is, the market doesn't even know you. And you think that the market is behind your M2M. If you take things so personally, you will miss out on a lot. Isn't it so? And of course, the binding and ultimate underlying thing is to have a method. Because method is the most important thing in terms of the practical things you can do. There are two things which will go on and on. There's an emotional management which will go continuous. There is a practical approach which will go continuous. And you have to learn how to balance this two. Now, the social structure has taught us that if you study well and if you get some degree and if you get a job, you will make money and eventually have a satisfied financial life. But as every little lie, the more money you have, the more money you tend to want. The more money you have, your lifestyle increases, so you don't save much money. And, there's this sort of gap always there, which I want more. So emotionally, you're not even told in the social structure that you need to work on it. You need to learn how to be satisfied and work towards long-term gains. But practically also, they tell you to just go and get a degree. And we all dream that when we are doing our studies, that our education will help us to, sort of be able to do business. MBA is called Masters of Business Administration. How many MBAs are doing MBA to do business? They're doing it for a job. I'm not saying anything wrong with a job. I'm just trying to say that there is a shift which you require, and you will be having the courage to step and come to the 5% category. Okay, Mr. Jatin is asking, hi Mohit. No, my name is Mohak, M-O-H-A-K. Anyway, in this such volatile market, how can we know whether the market is going to go up or down? Well, Mr. Jatin, as I said, you need to learn how to use the charts. In the worst of markets, for people's perspective, I tell you, my students and me have the best quarter of our lives. Best quarter in terms of the size of money which has been made. Trust me. Trust me. Best quarter. It's no joke, I'm saying this. No joke. Best quarter of my life. All our lives like that. But that's still now. There's going to be a better tomorrow. That is always going to happen. Our focus is somewhere else. Say, for example, I was I'll use this funny example. So right now you are doing a household work. So I was putting झाड़ू मार रहा था मैं घर में झाड़ू मारते मारते what happened is that that broom that started the what do you call it, those things which come out of that broom, they started twisting a little bit. Then I realized I have to rotate the jhadu in a proper way. Okay, I live alone. Okay, and I have to take care of cleaning my house and all, especially right now. So I have to rotate that jhadu. So what I started to do is I started to rotate the jhadu so the uniformity is maintained of those sticks in the broom. What happened is automatically it got set as well as the floor got cleaned. And then my jhadu putting method was to rotate the jhadu. So my focus is how do I rotate the jhadu? What happens is a byproduct of that is the first becomes clean, the floor becomes clean. Similarly, my focus is to apply my method. What happens is a byproduct is I get more money. Now, because my capital size has increased, there's an increment in the income, or the markets are more volatile, there's an increment in the income. The method is more consistent, there's an increment in income, there's a more better emotional, more smoother equity curve, emotional management is better, there's a betterment income. Most people undermine the value of emotional leverage. They think that money will happen only if you have got a capital. No, it's wrong. You have leverage of emotions, you have leverage of discipline. Have you exercised those leverage? They don't require any capital. Isn't it so? Right. So yeah, I will, Mr. Jay, I've got a number, my team will get in touch with you. Not an issue. Yeah. The coming batch is Hindi batch, although we alternate between Hindi and English. Okay. So we have to understand these scenarios. And coming back to the money management part, booking profits, as I said, having a regime to book profits. If you don't have a regime, you're going to be lost. There is no end to how much you can imagine in your imagination. Oh, let me make more money on this trade. As I said, emotional attachment to one trade is the biggest problem. Now, what your perception of greed or fear is, most people narrow it down to greed or fear. But the emotions that spring out of that greed or fear, it can be various different types of emotion. It can be regret, it can be exuberance, it can be a feeling of insecurity or over security or overconfidence. There can be paralysis, hesitation, as well as there can be a feeling of joy and abundance. You can choose to feel positive also, right? So it's not just about greed and fear. And I feel the word greed is also an output of fear. The greed is actually a fear of never again having opportunities. So let me make as much as I can right now. There's a fear that tomorrow that opportunity might not come. And what is the opposite of fear? So all the negative feelings actually come out of fear. Where do all the positive feelings come from? Love and joy. You really have to love what you're doing in trading in order to take this step, in order to be consistent, in order to develop and install this mindset. You have to really love what you're doing. And you have to develop joy and satisfaction in other areas of life also. Most people I see who are addicted to trading, always in tension. They're continuously thinking about trading. As a professional, I tell you, I sometimes if I if I feel like I want to trade only one half of the day, I did that. I shut computer. I don't look at the market for enough time. You don't have to look at every tick of SGX. You don't have to do that. When you sit with your homework, sit with your homework. When you sit with the market, sit with the market. When you get the right opportunity, take the trade. If you don't, wait. But have you understood waiting as a function of trading? No, because waiting gets me emotional. That is not how professional traders think. For retail traders, waiting gets them emotional. Mr. Vijay, we have an online course which is just like this webinar. It's a webinar based course. All the details will be given to you. You can send in your number. Okay. You get all the details of the course structure and what are the continuing after course services which are for free. All of those things you will understand. Okay, Mr. Jatin is asking, I have one more question, Mark. I was looking to invest into equity. Is this the right time to do, or the market going to go down? I'm in a dilemma. Just want to take on this. I mean, your personal view. Should I invest now or wait for some more time? Okay. So, Mr. Jatin, a good question and gives me an opportunity to answer for everyone. Now, the thing is that market discounts expectations. One way to look at it is that the market has discounted the expectation that the lockdowns and the virus issues will create a wave of destruction in productivity and GDP growth. It will create issues with cash and sort of tourism revenues will go down, healthcare expenses will go up, etc., etc. So this is very fundamental in nature. When the market is trending down, from a trader perspective, I'm short, market is trending up. I like to participate on the up move also, even if it is a pullback. Now, if we look at the larger picture of investment, a lot of volatility has been seen recently. And more than anything else, the important point right now is to look at your allocation. You need to allocate a certain part of your savings in equity. Now, if you look at it from a 20 years or 15 years perspective, it doesn't matter if you buy now or buy 500 points lower or higher. Okay. The point is that you nibble into some stocks and hold on to it. And if the market goes lower also or goes higher also, when you have more savings and more money, you nibble into those stocks which are viable that time. As far as I am concerned, my view is concerned, most people will not understand my plight. I have shared this to my students, not publicly ever, but today I'm going to say it. I have zero investment in the stock market. I only trade. I'm not an investor. I had with my family portfolio, I had taken some stocks a few years back, which I exited in profits. The last stock I exited was in TCS at 2018, I guess. And since then, I think I had some Axis Bank, which I exited. It is trailing stop loss. And other than that, I have no investment in the markets. And I used to, in the beginning stages, some cash delivery based things I used to. But trust me, I'm not an investor, so that's not my expertise. What I can say from my knowledge of markets and analysis is that over the long term, when you're saying 2 years, don't even think about 2 years. The investor psychology is that you expect less and expect it to take time. If you have shortened your expectations, the market will get you emotional. And the second is you need to understand how to sort of lessen your exposure. So if you have, say, for example, and this can be different number for you, but if you have, say, 10 lakh rupees, you don't want to put more than 1.5 lakh rupees in equity. And if you have 10 crore rupees, don't put them 1.5 or 2 crore rupees in equity. Now, if you have somebody who is the age of 30, this percentage can be different. If you're at the age of 40 or 50 or 60, the percentage can be different. So I would say follow the allocation. Don't follow just that I want to invest, that is why I'm investing, or in the greed of returns. Those who do this and follow allocation are actually the ones who make money in their mutual funds or SIPs or whatever, and they make it without anxious free money they make. Okay. So understand that the function of trading well and becoming a trader, becoming a professional trader is a method and a mindset that is required, right? And speaking of the last point, position sizing will be an important role. Again, it resonates with the thing which I spoke about, allocation. So if my position sizing is such that most of the time, if my position sizing is such that even if I get a string of 2 or 3 trades, I don't generally get that, but if I get 2 3 trades which are wrong in a row, I will be able to still trade well and make profits and take the opportunities which are coming with the better opportunities that might come. So I'm having a probability based approach and not approaching that every trade needs to be 100% probability that it will be right. So I have a probability based approach. On a subjective level, it can be say like 70% chance of making a trade profit on a trade. Okay. So out of 10 trades, 7 trades could be right. Out of 20 trades, 14 trades could be right. I cannot say the first 3 trades will be right, the second and third trade will be wrong, or what will the sequence be. So I have I have a position sizing rule. At a subjective level, I can judge which is a better trade. Some of the trades will be more high probability or more bigger movements or better setups. So accordingly, I increase my position size sometimes. So it's a very good setup, then I might take 1.5 times or 2 times of my regular position size. But if it is the within this objective circle, then I have generally got rules, and everybody who is a professional has rules. Regardless, and if there's a capital increment, if you think you're going to end up taking more positions, just because you made 1 lakh rupees out of 1 lakh rupees doesn't mean that you have the sudden mental capacity to trade with a capital of 2 lakh rupees. Learn to withdraw profits and take it in your bank account, or learn to keep the position sizing constant. This is a discipline which you need to follow. And discipline, in the end of the day, what happens is, what do you mean by discipline? Discipline is an act of refocusing. Discipline is an act of doing something in a way with a consistent belief that anything that comes towards it that does not support any belief or any argument or any conflict, internal or external, comes towards it that does not support the purpose, that gets that bounces off from the surface. It doesn't touch you. Discipline is a shield, and people who win, people who are successful in trading or otherwise, they have the shield. They manage to protect their focus. And if you're focused, if you have concentration, and if you are ready to sacrifice short-term gains, learn the skill, eventually you will see an unimaginable gains coming to you. This is how growth in trading happens. So I will be ending this webinar right now. Thank you so much for your lovely time and your on a weekday evening connecting with me, being here. If anybody wants to leave their number still or ask any questions, most welcome. And then I'll log out the webinar. If you have any questions, please ask. Yes, Deshoro. Thank you so much. Thank you. I will. Okay, Rahul. Complete your question. Oh, FI buying, DI buying, all this, I don't look at it, to be honest, because the moment you read it, by dinner time you forget who bought how much. And there are many institutions and there are many stocks. One of the places I was working with, our clients were DIIs actually. So that brokerage firm, my first job as a technical analyst, the clients were DIIs. So trust me, there are many stocks and many DIs. Just because there's a buy figure, it doesn't mean they're buying a certain category of stocks or all institutes are buying stocks. ऐसा कुछ भी नहीं है. If you're a trader, you have to think like a trader. Think about price mechanism. Now I can show you many days if I sell figure, the next day market is up. DI buy figure, the next day market is up. So don't make that connection until that connection is consistent or those correlations are consistent. Right. So I understand your intention is that there's a soft variable out there which you want to exploit, but trust me, it's not worth it. At least this one, in my perspective, my humble view, not worth it. Say if you talk about correlation with the US markets, that's a soft variable too. Because the theme is consistent all over the world, you will see higher correlations. But there will be phases of the market where Indian markets is this side and US market is this side, or vice versa. So that negative correlation also you will see. So that you have to take in those and factor in those in your analysis. Are you getting my point, Rahul? Right. Thank you, Vijayji. Thank you, Deep. Deep, maybe I've seen you for the first time. I get a idea that. Thank you. If it helped in your mindset, do look at www.technicallysolved.com and also all the other YouTube videos. Go to the video section of the YouTube channel Mohat Pachisia. See all the videos, and you will learn a lot. And those who have inquired for the course, etc., my team will get back to you. So thank you so much for taking the interest. Mr. Arindam, is it better to hedge a position rather than naked trade? It doesn't really matter, Mr. Arindam ji, because in the end, if you want to take a futures position and you want to buy a put, might as well just go and buy a call. Okay. Now, if your position is way in the money and you need to manage risk in a certain way, then you can choose to hedge a position. But the point is that instead of buying a futures and buying a put, you can just go and buy a call. So that is also one thing which you can do, right? So it's okay to sometimes hedge, but don't do it just because you don't want to take a loss, just because you want somewhere profit should come somewhere. That will end up getting a net realized loss only if it goes wrong. So be accepting of that. Take lower positions. Some case situations hedging can be fine. Okay. Yeah, so this video will be up there on YouTube, and those who are watching this on YouTube, please subscribe to the channel, like, share, comment, and share this video with all your friends. Yeah, so I've said that it will be on YouTube. Mr. Chandrasekhar, right? Thank you so much, ladies and gentlemen. I guess no more questions, and it was really lovely having all of you. Thank you very much. I will see you very soon. Keep following us on different social media channels. And what I'm doing with Technically Sorted since the last 5 years is life changing for a lot of people. I have not spoken about my course today, but trust me, explore our course. It's amazing, it's beautiful, and it's long, and it's something which builds strong foundation. The fees is very reasonable, and you can be making a promising career like many of the past students have, and they're still in touch with me. Rahul, I really suggest you go to www.technicallysorted.com, because see what happens in the course is it's a structured way of learning. In the free webinars, because there is a different variety of crowd every time, I'm not going class by class, so I don't know how much knowledge everyone has, what preconceived there is. So I keep it more basic, keep it more wide, broader, make sure everybody gets something from it, right? Thank you, Chandrasekhar ji. God bless you too, and may you too keep growing. All of you keep growing, and I hope all of you are safe indoors and happy and healthy, and so are your families. Please take care. Make sure that you don't go out unnecessarily, and this too shall pass. Okay. Thank you so much. Have a great evening. Have a great night, and take care. Goodbye. Enjoy.